Hello and welcome to Building the Premier Accounting Firm. This is a podcast dedicated to individuals working to start, build, and have the premier accounting firm in their area. It's in this podcast that we address various topics that range from marketing and selling, pricing, onboarding clients, retaining clients, mental health, and so much more. Each and every week we have on the show guests, experts in their own right as to things that they've done, implemented, and advise us as to how we can in fact become the leaders we need to be. And today's going to be no exception. I'm your host, Roger Knecht, president of Universal Accounting Center, and my guest happens to be Ron Baker. Ron started his CPA career back in 1984 with KPMG. He actually is offering private advisory services in San Francisco today. He is the founder of VeraSage Institute, the leading think tank dedicated to educating professionals internationally, and also a radio talk show host on the Voice America show, The Soul of Enterprise, Business in the Knowledge Economy. Now, as a frequent speaker, writer, and educator, his work actually takes him around the world. He has been the instructor in the California CPA Education Foundation since 1995 and has authored a number of books, 20 courses for them, as the author of 7 best-selling books, including ones that I'm sure you're familiar with, such as Professional's Guide to Value Pricing, The Firm of the Future, A Guide for Accountants, Lawyers, and Other Professional Services, Implementing Value Pricing, A Radical Business Model for Professional Firms is another one. And his latest book, written with Paul Dunn, happens to be Time's Up. Now, this is a subscription business model for professional firms, and it was published in November of 2022. Ron has toured the world spreading his value pricing message to over 250,000 professionals. He has been named on Accounting Today's 2001 and 2007, as well as 2011 and 22. He's the top 100 most influential people in the profession, voted among the top 10 most influential people in the profession from 2012 to 2022. I mean, the list goes on and on. Ron, welcome to the show.
Wow, Roger, thank you so much.
Yeah, this is going to be a lot of fun. So I'm going to take us back, Ron. We've got a little bit of history. So I'm going to take us back to IPBC up in Canada. And we were at a bar sitting down going over a number of things. And it was the start of this conversation of value pricing there, which led to the Black Swan program. Do you remember all this?
I sure do.
Boy, that was amazing. So I wanted to go back to this because I know that at the time, it was years ago that people were just trying to embrace this idea of value pricing. You had originally written the book and you were bringing it into the accounting profession. I'm curious, when you reflect on that whole experience, especially working with those firms as they were struggling to implement and change the value pricing principle, what do you recall the frustration or challenge for those firms to be?
I think it's mostly mindset, Roger, just unlearning what we've all been taught, what I was taught, and then embracing something new and just trying it. You can know about these things. You can sit in a course and learn them. But knowledge is not necessarily understanding. You don't really understand it until you embrace it and do it. And I was really honored because the Black Swan program ran for several years. Mm-hmm. I think we put eventually about 50 people through it, and we transformed every one of them. They embraced value pricing. They got rid of timesheets if they had them, and they really re-engineered their firms. So it can be done, but it requires you to do a lot of unlearning.
I like that because I do agree. A lot of times cognitively, you can understand a concept. You can see its worth, the reasons for you to implement it. But then there's the time, the energy, the effort of implementing it, adapting it as it's being rolled out. What were some of the learnings that you took from working with those 50 firms and helping them actually adopt and implement the value pricing at the time?
That bookkeepers have better relationships with their customers than do CPAs. That was a big takeaway because they're at the coalface. They're out there every day, and those relationships are stronger than a CPA who might just see a customer once or twice, maybe 3 times a year.
Yeah.
So that was a big takeaway for me. And plus, just that bookkeepers are pretty innovative. They come from various backgrounds, so they're not taught all the same orthodoxy like a CPA is. They might be coming from industry or whatever. So there's a lot of lot of diversity amongst the bookkeepers, and it was just a joy to work with them, and I still love working with them.
I appreciate that insight because I would agree. As I've worked with numerous bookkeepers, I have found that they're a little bit more malleable. They're willing to adopt new principles or try new things only because of the fact that their backgrounds are so diverse. And I think oftentimes their industry experience, their professional development has been so diverse that they can each tap into those things. Where a more orthodox, as you said, more formally trained accounting professional may have a little bit more rigidity as to how it's supposed to be done because of perhaps the academics they were exposed to and so forth. So, yeah, that's a very important insight. So, value pricing, that was something that was quite revolutionary at the time. People were very customary to hourly pricing, maybe fixed rate or menu pricing kind of came on the scene, revenue pricing. But value pricing was unique in the sense that it was requiring a mind shift and a different relationship with the client to determine the fee. How would you define for the audience who doesn't know this evolution and yet may still have heard the term, how would you describe what value pricing is?
Yeah, value pricing is basically pricing the customer and not the services. So because value is subjective and it
Mm-hmm.
varies from customer to customer. So by providing a bespoke set of options, and that's another part of value pricing is providing, say, 3 options to the customer to let them decide
Mm-hmm.
what value price point they're comfortable with. Just like most businesses give us 3 options, right? Tall, medium, tall, short, grande, whatever. And I think we should be doing that as well for our customers, give them choices. So that was the big mind shift change with value pricing is you were pricing the customer, not the services.
I like that explanation because it's similar to the conversations I've had as I've tried to explain it to the people I work with. Using your context, when I would go into a firm, I would try to help them realize that if they go in with a features approach, here's what I do, here's what you're buying, this is what you're going to get, all of a sudden the menu pricing becomes clear. Here's my fee, take it or leave it, pick what you want. Value pricing, as you're describing it, is a lot more time intensive, learning about the client, assessing what their needs are, what their goals are, determining what kind of gain will come, savings or revenue from the implementation of whatever said process is, and identifying what that worth is to the client then can help determine what you're going to charge for that service. So if they're going to have a tax savings of hundreds or millions of dollars, it's easier in your own mind to then charge the $10,000 or $100,000 fee versus, well, it's just going to be my time and I'll just do whatever it takes and be done with it. So the next question I have about value pricing before we leave it is, with value pricing, do you have like a story or an example of its implementation and how it was so different than what would have been traditionally done if it was just a flat rate or something like that?
Oh, wow. There's so many of them. It's just amazing. I remember one black swan that we had in the program who literally doubled her revenue and her profit in the second year, and then doubled it again in the third year, and then doubled it again in the fourth year.
Wow.
Because it's one of those iterative processes where when you start value pricing, you get better at it. It's like golf or tennis. It's a skill.
Mm-hmm.
And the more you do it, the better you get. And I also think the braver you get and the more self-esteem you get, because you realize that, hey, I am worth it.
Mm-hmm.
And there is great nobility in being paid what I'm worth because I'm adding so much value. And they also get a lot more selective about the customers they take on.
Yeah.
And that has a big dramatic impact alone on their profitability and their growth and all of that. So it really is a business model change, because a lot of like even the black swans that went through the program, they ended up really focusing down on a niche or a particular demographic, whether it was startups or restaurants or
Mm-hmm.
whatever it was. And that made it a big difference as well. So it's hard to tease out the value pricing from the other effects on their mentality, on their self-esteem, on their business strategy and positioning, because it's all kind of a system that works together. but it does force you to reevaluate everything.
Yeah, your example there just a moment ago of how it caused them to niche their services and become less generalist in their offerings. I've experienced that. What I've seen is the firms actually start to realize that they really do have a specialty and expertise, and they're able to then, in offering the value pricing, really target those same industries and companies because they know they can deliver. They know they can actually put that value into the firm, and so all of a sudden they become a lot more confident. And you're right, the pricing does increase as they realize the value, the worth of what the service is. So showing that example of year after year after year doubling again and again, I do see that simply because the confidence does increase once they become familiar with how to properly evaluate what that worth is and then price it accordingly. So good. So I know that in your latest rendition, you've also now started to speak of subscription type pricing and bringing into that business model this new concept. Well, I wouldn't say new concept, but an important concept that's very much part of our economy today. Tell us about this change now to emphasize subscription-based pricing.
Well, the subscription economy is expected to grow to $1.5 trillion by 2025, and a majority, super majority of the unicorns out there
Mm-hmm.
are all subscription based.
Yeah.
And I think what's going on is we are moving from a world where we own things to where we subscribe to things. Now, I don't think ownership is going to go away completely, but what I do believe is we will have the option to subscribe to nearly anything. And even if your firm doesn't do anything about that or confront it or try and change, it is going to be confronted with that because the competition is going to start offering this. So, for example, today I can subscribe to a whole host of things. I mean, I can subscribe to a boat from Brunswick. I can subscribe to a fleet of Porsche automobiles
Mm-hmm.
through their subscription program,
Yeah.
Porsche Drive, where I can literally swap out a Porsche every day with 7 different models, and it's white gloved out to me. I don't have to worry about maintenance or all the hassles of owning a car. They pay for everything except gas and tolls. So my thought is, Roger, why can't professional firms, accounting firms especially, why can't we do the same thing? Why don't our customers subscribe to us and then we basically just take care of them for whatever they need that we do? So my model for this is the direct primary care physician, which now there are over 1,800 of, and there are even bigger practices across the United States. Amazon just bought one for $3.5 billion, so they're making a move into this space
Mm.
big time. But these are general physicians. You subscribe to them, and they handle whatever you need that they can do. Now, they're not going to do cardiac surgery or
Mm-hmm.
cure your cancer or anything like that because they're just they're GPs, but you get that feeling of security, peace of mind. It's convenient. The subscription model forces you to surface simplicity with your customers. You just take care of them. And the other thing I really like about it is it separates the pricing from the work. So we are no longer talking about, the scope of services and this and that. And, is this out of scope or is this in scope? And if it's out of scope, we have to go to the Department of Paperwork and get a change order. And all of this just creates friction and hurdles with the customer. Let's just give the customer a seamless experience. Let's take care of anything that we can do. And by the way, if we can't do it, let's go out to our social capital networks and find experts and other specialists to refer them to, just like a GP would if you needed surgery. They would even go with you to that appointment. Now, the reason they're able to do this is because they have less customers. The average general physician in the United States has 2,400 patients, and the direct primary care physician has 600 patients. So they've cut their capacity dramatically, but that means that they can keep you healthy. They're not just about curing you when you present with a sickness or an illness. They're about keeping you healthy. So there's more preventive illnesses. There's more, integrative care. They also are concerned about the other goals of your health. So they're there to keep you healthy. Well, if you think about it, accountants, bookkeepers, they keep their customers financially healthy. So the direct primary care model, which has been around since 1996, by the way, so it's nothing new.
Yeah.
Uh, I think this is the absolute model for professional firms going forward.
So your example there, I think, is spot on. I think as a culture, we've become very familiar and accustomed to this whole subscription model. And in my business consulting side of the business, I spend a lot of time with my clients talking about, in an effort to increase the valuation of their companies, one of the things that you want to look for is how to establish recurring revenue streams. And if you can show within your business that you've got this recurring revenue, the valuation of your company goes up, because no longer are you in a position where each and every month, each and every week or day are you trying to find new customers that are purchasing your product or service. You've got at least a revenue stream that is recurring as a base that you can then cover your fixed costs and so forth. And so the valuation of the business changes. And when you apply that principle, as you're suggesting, to professional services, accounting firms, we're in a very similar situation. We have our contractual relationships with our clients, perhaps, where we're providing monthly or quarterly reports. But at the same time, if we could then put it into this subscription model, I think it's conducive to what their mindset already is. They're paying for their Apple this, their Netflix that, they're paying for their Spotify, their Kindle. Who knows what their subscriptions are, but we're all paying for our phone bills. We're all paying for our internet, and all those things have just become customary. And now what you're suggesting is that we apply it to professional services. And the general practitioner doctor example there was an excellent one. So how does this come out in the book Time's Up?
Well, we talk about the DPC revolution and how they're disrupting medical care and delivering it in a new way. So this is really another business model change. And there are some aspects of value pricing business model there that are the same, but it also blows up some things in value pricing that are no longer relevant to subscription.
Mm-hmm.
Because the important thing about a business model change is the revenue model changes, the profit formula changes, and a big component of that is what you just mentioned about this is going to result in a higher valued practice when you go to exit.
Mm-hmm.
And that is certainly true. By the way, we are seeing multiples of anywhere from 5 to 11 times gross revenue
heavens.
when you have recurring revenue, because and John Warlow makes this point, the distinction between recurring revenue and reoccurring revenue.
Correct.
Now, bookkeepers and accountants have a lot of reoccurring revenue because they get, the compliance every year, blah, blah, blah. But it's still kind of like a rash, it's sporadic. You never know when it's going to come back. There's still a lot of one and dones with that type of work. Whereas if you have recurring revenue, just like you said, Roger, you start on the 50-yard line every day. You're not starting in the end zone every day where you have to feed the funnel and do the marketing. You've got a relationship built, and the subscription model is all about the relationship. It puts the relationship at the center of the business, and everything in that business revolves around that relationship. And we are now tracking customer lifetime value. We are no longer looking at the math of the moment. We're no longer trying to figure out gross margin per job, per customer. I mean, that even went away in value pricing, but even more so in subscription, because now subscription, it's even got a different income statement than the normal income statement of a regular business, because it's starting with annual recurring revenue. It's backing out churn, which is the number of customers you lost and the revenue that resulted from that, and ending with ending ARR. So it's a forward-looking revenue model. So the profit formula is the analysis of profit is completely different. In fact, you could take all your profit and reinvest it into the growth of the firm, into growing ARR. And as long as the bucket's not leaking, you're going to have a much more valuable firm. And that's going to make a big difference when you go to sell it. So those are some of the things that we talk about in the book, including, by the way, the other thing that changes when you change a business model is the KPIs you look at. Your dashboard changes. We're not looking at the same KPIs.
So a few things, just because you covered so well some great things here. One, John Warlow, you're right. He, in his book Automatic Customers, addresses this, and in his book Built to Sell, covers how this makes up one of the 8 drivers that determines the value of the business. So I think we're onto something here. And as to the the KPIs and so forth. You brought up churn. You're right. With subscription programs, you can actually diminish the churn rate that's going on with your clients as you traditionally may have been losing them. But with subscription models, I would presume it's an argument. You can make an argument that the lifetime value of the customer goes up because they are sustained longer. So there's a lot of great things that are being said here. I'm curious, because of the subscription that we're talking about now, the subscription model and the value pricing model, I would assume that you would be a proponent for value pricing being more project-based then to complement the subscriptions that the customers may be paying on a regular basis. Is that a fair assessment of how the two play together?
Well, there are some subscription models that work like that. So there's a subscription component, and then there's a usage component, depending on what you may be doing for the customer. I, however, look to the direct primary care doctors and the concierge doctors that are all inclusive. I hate to say all you can eat because it freaks people out, but it is an all you can eat model of what you decide to serve. And there's the distinction. There's the constraint on the scope of work. They're not going to ask you to, teach them how to fly or cook. I mean, you're doing things that you professionally can do very competently. You're staying in your lane. You're niched. You know what you can do and what you can't do. But I'm all for getting rid of this idea of scope of work because, Roger, the services are a means to an end. The other big thing about subscription is it changes the revenue model. And the revenue model is a simple question. What are we asking our customers to pay us for? And if you think about it, if you think of a company like Fender that sells guitars, are they really selling guitars? Well, the CEO said no. The CEO of Fender said, no, we're not selling guitars when you really think about it, because people buy a guitar, they're all excited, they want to learn how to play, and 95% of them quit within 6 months. And then the guitar goes into the closet. They may even give it away to somebody else, gift it, which causes another lost sale to Fender. So Fender said, we're going to teach people how to play. We're going to set up Fender Play, a digital library, 3,000 videos that can, teach a beginner all the way to an expert how to play better. And he said, what we're really selling, what our customers are really paying us for is musicianship. And I think what our customers are paying us for are transformations. We can help businesses grow. We can help businesses become more valuable. We can help people retire sooner. We can help people get their kid into college. We can help people plan their legacy. We can offer these transformations where you're moving the customer from where they are to some desired future state. And when you do that, when your company or your firm offers or guides transformations, then the customer's the product. It's no longer about the services. You're changing that customer permanently, just like we do when we get married or recognized for our military service with awards or medals. All the transformations that we go through in our lives are deep and meaningful, and they're bespoke. And we do this all the time, but we don't use this language. We don't message this way. We don't communicate our value this way. We're so caught up in scope of work and fee for service and scope and out of scope and all of that. And I just think that needs to be blown up because it's not about the services. It's about those transformations. And we can provide those transformations serially. We can do it from womb to tomb. And that is the apotheosis of value.
That's beautiful. The thing that I'm liking about this is you're bringing in that personal element. So often I think what we're looking at is we provide as accounting professionals either tax compliance type work, and all of a sudden it's impersonal. It's a task. But what you're doing is you're clearly identifying from womb to tomb the fact that we do have an impact on people's livelihoods. We can impact how they're saving money for their children to go to college and so forth. So we can change lives and impact lives. And the beauty of what I'm thinking the accounting profession needs to embrace is the fact that if we are more involved with our clients, we can empower them with the information that we have access to, just being what I refer to as an accountrepreneur, going in and helping them literally take the information that we're providing to make more informed business decisions that can revolutionize their business, help them become more profitable, and as we've already stated, help them prepare for their own exit and valuation. So this is really, really good. As you've worked with so many professionals, what do you feel is holding them back from some of these concepts? Or is it just tradition and familiarity? Is it fear, like you were addressing earlier on? Because what we're talking about is originally embracing value pricing. Now we're talking about subscription. Where's the catalyst that we're needing that would enable somebody to really embrace this and run with it?
Yeah, it's a great question. I've been obsessed with the last 4 years since that's about as long as I've been studying subscription and took a deep dive with the direct primary care doctors. And I've been obsessed with the question of why did you enter your profession in the first place? And when you ask any professional this question, now some will say to make money, some will say, well, especially accountants will say job security. Okay, that's all true. But about 2/3 of the time, and even more in some professions, you hear, I entered this profession to help people.
Mm-hmm.
Well, you can't help people if you got 1,000 customers. I'm sorry. It just, relationships don't scale.
Yeah.
Now, that doesn't mean that businesses based on relationships can't scale. But what it does mean is that any one individual professional can only handle so many customers. And like you said, to be able to make an impact on them. I don't want to just treat my customer when they're sick and bring them back to health. I want to keep them healthy. And I can't do that if I don't have time to invest in the relationship, breaking bread with them and just talking with them, visiting their business and touring their facilities and getting a deeper understanding of their business model and helping them work on their business model, not just their accounting, the results of their business model, but actually helping them strategize about their model and should they change it. And those types of things, we have the capacity to do that because we're not constrained by a physical, tangible offering. We're only constrained by our knowledge and our curiosity, and that's endless. So I think what holds people back is this concept of satisficing, where you know what, it's sufficient and it's satisfactory, and we don't have, it's good enough. I'm not here to optimize it. I'm not here to maximize it. It's good enough. And I think that holds a lot of people back from thinking, how can we up our game and reach a higher level and do more for our customers and have a bigger impact on their lives? And so I just look at subscription as a way to get us back to why we entered the profession in the first place.
Beautiful, beautiful. Yeah, I just had a conversation yesterday about this, and it's the fact that too many in the profession, in my opinion, are what I would refer to as minimalists. And you said it when you just basically said it's compliant, it's enough. I think that's just doing a disservice not only to our profession, but to our clients. And more importantly, I think we're missing out on opportunities to really make a difference in what the clients are experiencing as they're running their businesses. If we just took a moment and went a little deeper and just tried to be a little bit more creative, we could find so many more things that we could be doing for our clients that would really empower them to take their business to a whole new level. And as our clients grow and expand, not only do our services grow with them, I believe, but then the relationship is extended. We retain them longer, and that's what we're hoping for. Is rather than the churn of losing clients, we should be building deeper, longer, engaged relationships with our clients. And what you just said about breaking bread with them is, I think, a good start to all of that. The next question I wanted to ask is, where do you see the accounting profession or professions in general going in the coming years with technology as it is, with AI, blockchain? There's a lot of revolutionary things that are on the horizon. They've been alluded to for a number of years. I don't think there's any surprises per se, but what do you see on the horizon as something that we should be at least aware of as an accounting profession?
Yeah, I'm very bullish about the profession and some of these great technologies that are going to take some of the more mundane, repetitive tasks. And that, of course, that's the big challenge. A lot of people understand that they can automate a lot of different things with this great new technology.
Hmm.
But my problem, Roger, is when you free up that capacity because of that automation, what we tend to do is go out and get the same type of work. We don't drift up the value curve
Mm.
by providing transformations. We go out and get the same type of work that can be automated, which keeps us at the lower end of the value curve. So this is why I'm such a big proponent of shrinking the number of customers that you work with, but quadrupling your price, but then having bigger impacts on them by guiding their serial transformations of, helping them get to their desired future state. I think the other problem I see in the profession is we're so focused on solving problems. And look, we're great problem solvers. All professionals are. But if that's all we do, if all we do is solve our customers' problems, we're just reverting them back to the status quo. We're not advancing them.
Mm.
I want to advance them. And the subscription model gives us a platform to do that.
I appreciate that. That is really helpful because I was just last week working with a business client of ours, and as I was speaking with them, they shared as much. They, over the last 3 years that we've been working with them, just basically said, because when we're recording this, it's just start of 2023, they were just reflecting over the previous year and realized that their business has changed so much simply because of the insights and things that we've been discussing and what they've been able to implement. And my point is to basically say what you just said. They were able to really evolve their business and change how they do business, not because we were putting out fires, not because we were just trying to address the issues as they arose, but we were trying to get ahead of things. We were trying to implement policies and procedures, embrace new things, and their business has evolved simply because of the fact that we were being proactive in a lot of regards as they worked on their business. And I think that's an illustration of your point there. So well said. The next question I wanted to get into is, in reading Time's Up, I haven't had a chance to read it. It's newly released, just came out just over a month ago. What should I be looking for as my biggest takeaway or aha from that? What should I be paying attention to as I'm reading to notice?
Oh, wow. There's so much in there, but I would say the big thing is we talked about why people enter the profession to help people.
Mm-hmm.
And yet our business model is not aligned with our rhetoric or our purpose. Because look at what we monetize. We monetize the services. Just like a normal GP doctor today is in a fee-for-service treadmill, that's terrible because they're not being compensated for what they do for patients, but what they do to them. And I want to align our business model with our purpose and our rhetoric about how important the relationship is.
Mm-hmm.
And the subscription model does that. It basically monetizes the relationship. It's not about pricing the customer anymore. It's about monetizing that lifetime customer value. With subscription, you are building lifetime annuities that are more valuable than the cost to acquire them. And I think that again, provides a great platform to help guide our customers into their desired future. And that's what being a professional is all about. My favorite definition of what it means to be a professional is someone who is responsible for creating a result, not performing a series of tasks. And yet, when you look at our business model, we get compensated for performing tasks. And I want us to focus on that outcome, that musicianship. We're selling the guitar, and I want to sell musicianship.
I love this. This is wonderful. Regarding subscriptions, there's one thought that I had as well, and you may have a comment on this. I have found with businesses that have that recurring revenue through the subscription model that they get away from having to track expenses transactions, and they're able to focus more on servicing the client because their concern about the revenue, charging, doing the transaction starts to dissipate because of the fee was paid at the beginning of the month for the service. They came in and they just provided the service. Is that a oversimplification of it?
No, that's exactly what it is. You're moving from transactional to relational.
Yeah.
And the other thing that you're doing, and this is another big idea in the book along with transformations, is this idea of plussing, which I borrowed from Walt Disney. You know, he wanted to constantly plus the parks to make them a more pleasant experience and surprise and delight the guests to keep bringing them back. And so you have to bake in innovation into this model. You're constantly upping your game about what it is you can do for your customers. And I think that's another big thing that forces us to just improve as a profession. We can constantly innovate and bake that in and just provide that to the customer, and that enhances our value.
Beautiful. Beautiful. All right. Here's what I'm going to do, Ron. I'm going to wrap this up, and I'm going to come back to you for a closing thought. And as I wrap this up, what I want to do is encourage all of our guests, the listeners, to go to the episode description. And in the description, Ron has been so kind to put their information on how you can get a copy of this new book, Time's Up. It's in the episode description. He's provided a link there for you to actually take advantage of special offer to receive it. Also put in their information regarding the two other books that we spoke of, which was The Automatic Customer, that was referenced, as well as Built to Sell. Those are two that I think are very much worth considering. And in addition, I'll give one other, which happens to be a book called In the Black. It's 9 Principles to Make Your Business Profitable. And it's literally the 9 steps that you need to be implementing in your business to complement all those day-to-day activities that you're working on, to ensure that you're working on the business and, in fact, putting profit as a priority. So take advantage of the episode description offers and go there. In addition, make sure that you're subscribing to the podcast. We definitely want to encourage you to do that and set your notifications to be reminded of each and every episode that we release every week. And for that, I do want to encourage you to go back and listen to past episodes. We have some amazing guests that have been on the show, some excellent insights on what it is that you can be doing to work on your business. And I invite you to go check out and binge watch those episodes and hear what the experts have to say. Now, as a summary of today's conversation, this did not fail. I was very excited to speak with Ron because I knew we would have some great conversations, first and foremost about value pricing. I really think that that is a concept that within our profession as accounting professionals, we need to be familiar. I think we ought too often sell ourselves short and see the work that we do as transactional or task-based, and therefore we do not appreciate the value of what it is we're doing and the win that the customer receives because of our expertise and effort. And if we were to properly assess that and price it accordingly, we could do so much more for the revenue that we're able to generate as we're doing the work that we do. We also spoke of what subscription pricing can be and how it can be a great supplement to the firm, generating recurring revenue, how ultimately it actually impacts the valuation of our business and can really help with what our company is worth as we consider exiting. And I think that's always good to have the begin with the end in mind philosophy. What are we trying to do to actually build our business so that it is a business we can be proud of? You'll hear me actually speak regularly of building this self-sustaining, living, breathing entity that is autonomous from the owner. And I think this is a step in that right direction. I really liked how Ron was able to point out how this is a people business, that we need to actually work with fewer clients, go deep with them. Let's make this personal, realize that, like Ron said, this is something that can really, truly impact them if we deliver accordingly from womb to tomb. That was a wonderful comment. And what I think it really illustrates is, once again, that this is a people business. And if we can get away from just doing the compliance and tax work and understand that we can impact our clients at a much more personal level, especially if we choose to go deep and get to know them, their why, and what it is they're doing in their business, and help them become more profitable, all of a sudden we're doing as I believe we should as an accounting profession, which is delivering quality information to help our clients make more informed business decisions. So with all that being said, Ron, what would you like to end with as a closing thought?
Oh, well, Roger, this has been wonderful. Thank you so much for having me on. And I guess I just want to, my ending thought would be, I think the profession needs to up its game. And I think the subscription model enables us to do that. And it restores us to why we entered the profession in the first place. This is a very high calling. And I don't want to get bogged down in fee for services, and I don't want to be on that treadmill. I want to help people at a deep level and make a substantial impact on their lives. And that is what being a professional is all about.
Beautiful, beautiful. Ron, thank you for that. Obviously, everyone, I want to encourage you again to subscribe to the podcast. Go back and listen to our other episodes. Take advantage of the free offers here in today's episode by going to the episode description. We definitely want to invite you to join us for GrowCon. GrowCon is an annual event, a conference that we do for accounting professionals to help them work on their business, and we'd love to have you attend and join us. GrowCon is an event that you don't want to miss as the owner of an accounting firm. For more information about these principles as well as others as you start and build your business, feel free to check us out at universalaccountingschool.com or give us a phone call at 801-265-3777. And always remember this, if it's about accounting, it is universal. Take care and be safe out there, everyone.